Hello, 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 everyone. This is Sharon, your retirement coach diva, and I am excited about today and my guest, as I am every month. But today we have Drae Peyton with us from Stay Sharp Funding, and Drae is going to provide us with some awesome information about credit repair for individuals and businesses and how our entrepreneurs can expand that and get funding through his services with credit repair because sometimes we have great ideas, we have great vision, we have those businesses out there that we're putting together, but we're not able to get the funding because of some past decisions that we made that weren't always the best, right? We sometimes get into situations that we just feel that we can't navigate. So Drae is here to tell us how we can do that, how we can able to build our business and build our credit. And so, Drae, I want to welcome you here to the Royal Nugget Podcast. How are you doing today?
I'm doing great. Thanks for the introduction. It's a blessing to be here. I love what you're doing with the podcast. I love the Royalty Business Group. Awesome stuff you got going on. I'm here to share this information on credit and funding to see exactly how I can help the next entrepreneur, even consumer. You don't have to be a business owner if you're having credit issues. Um, but it's more for the entrepreneur, small business side that are actually looking to get this capital, and their credit is kind of holding them back. So I really appreciate that.
Wonderful, wonderful. Well, now we're going to get started. First, we need to learn more about you. So tell us more about you, Drae, and how you became involved in this company.
So I first started out. So I started years ago. I started in sales. I was a car salesman. So I was a car consultant. I did a lot of wheeling and dealing for Ford. So I came out of Ford. I worked at that dealership for 7 years, and I was the lead salesperson in my dealership for a very long time. Very long time. I knew nothing about selling cars when I entered the industry, and I kind of took it by storm when I started selling cars, and I picked up on it really fast. How I started and transitioned from cars to this was I was actually going for a manager position within the dealership, and my dealership was actually going under at the time. So Ford came in, they took all the keys. We couldn't sell cars. So my GM, he fired the whole staff. He kept me on. He kept me on as salary just to come and keep the dealership afloat. Service was still open. So I was just kind of answering the phones at that time, letting them know that we couldn't sell cars. So my whole plan was once this new owner came in and took over the dealership, I was being prepped to be a sales manager. So I was going to be working the tower behind the desk, wheeling and dealing with my sales guys. Um, Long story short, when that dealership opened, I got shafted out of that manager position. They brought in some 23-year-old young kid, no family, no responsibilities, and they made this guy my boss.
Mhm.
So I this was around October. So I kind of waited it out. I waited it out and let the year play out. And then January hit, and I was just sitting at my desk, and I was just kind of thinking, and I was just like, man, it's got to be something else for me out here, other than just selling cars. I was working 60 hours a week. I really had no time for my family, so I was kind of trying to figure it out at that time. So I was sitting there, and then I just started packing my stuff. Like, I didn't tell anybody. I just started grabbing my stuff and putting it in a box. And my GM came to me, and this is one thing that really stuck. And he came to me, and it's one of his top guys, and he was like, "Hey, um, could you give me a 2 weeks notice on this?" And then I asked him, I said, you know what? I said, if you were getting ready to fire me, would you give me a 2 weeks notice?
Mm.
And he said no. So, and I told him the same thing. I said, no, man, it's my time. My time's up. I got to go. So from there, my commute was a little long to this job, to the dealership. It was a little bit long. So instead of me staying there, I said, you know what? I'll quit. I'll figure it out. I was going to go back and sell more cars. COVID hit. So once COVID hit, my brother had started a power washing company. It was his first company. So I kind of seen how he was running his company. And then I'm like, you know what? Let me actually build something of my own. So I started my LLC. I actually first started this company as a courier company. I was going to do, some courier things with my guys. I was going to get a couple vans, put them on the road, and we could kind of push some pallets. And I was going to have it that way. This was all around COVID time, so everybody was like losing their jobs, not going to jobs. So I had some actual guys under me willing to, work with me in the courier company. So that didn't work out. So, being an entrepreneur, things don't always go as planned, so you kind of got to pivot. So from there, what I did was I started working on people's credit that was close in my family and friends. I started repairing their credit. So, and from this courier company, I actually needed to do some repairs on my own credit. So I started studying the FCRA, consumer law, just a bunch of things to deal with credit restoration. So I was going down that path. And as I fixed and rebuilt my own credit, because one thing, I'll pivot back to the dealership. I saw a lot of credit reports at that dealership. So, some people would come in and they wouldn't have a clue. They wouldn't have a clue about credit. They don't know what their credit looks like. And then they're coming into a dealership and they're trying to buy a car. So I'm like, man, it's a lot of people that aren't really educated on credit. So I fixed my own credit. I started fixing people in my family, my friends, and that's how credit restoration came about. A lot of people heard of me through the blues, just in my community. They were reaching out to me. Hey, I heard you're, doing credit restoration. So I started taking on clients, and then it slowly shifted into a consultant company, which was credit repair. So I took that company from a courier company and I shifted it over to a consultant company. So I originally named it Drago Enterprise. Well, Drago Courier Services is what I originally named this company. And I had to change the name because one issue that I was running into, I was trying to get funding for my company. And me not knowing, this was years ago, me not knowing the information, I was actually going to get funded. And I found out my industry was restricted. So it stopped me from getting a lot of funding. So what I teach people today is just be careful when you're choosing your business name, because it can affect you when it comes to getting your business funded. They have what's called a NIAX code. It's a NICS code. It's a NIAX code. That's what it's called. And the banks will bracket you under that based on the name of your business. So I tell people, don't put exactly what you do in your business name because it might come back and haunt you later down the line. Everybody's starting a business. They're always excited. Oh, I'm going to name my company I Do This LLC, and I'm like, don't just, I'm not telling people don't put what you do in your name, but just double check and make sure you're not in a restricted industry, such as trucking, credit repair, real estate. Those are all high risk industries in the lender's eyes. So it will not necessarily disqualify you for funding, but it will kind of cost you on like the limits and things that they're willing to give you and fund your business. So.
Okay. Well, that was some great information. And I'm glad you shared about how, your story and how you got there. And it sounds like, one, you stepped out on faith when everything else was going, to the left. You said, I'm gonna go to the right and I'm gonna stay to the right. I'm not going
Yep.
to go find me another job in the same industry. I'm going to pivot and go to another way. And I want to just say to those that are watching, make sure you are liking and sharing this information right here, because it is some information that somebody and everybody needs to know. You know, you never know when you're going to be in that type of situation right now with things going on in the economy. It could be somebody you know, it could be you that falls into where you need to pivot. A lot of people are pivoting now. So that's a great story that you shared. And during COVID, a lot of people pivoted, you know, because
Yes, ma'am.
businesses weren't able to sustain like they had been in the past. And being able to say, like I said, instead of going to the left and staying with the mainstream, and you know, you challenged your manager and was like, hey, would you have given me a 2 week notice if you were gonna fire me? And of course not. You know,
Right.
of course not.
Right.
You
Right.
know, so you're like,
Yep.
I'm out of here. And you just went on and you learned from someone else. You said that you watched your brother build his business and you took those nuggets, as well as you learned for yourself about how to do these things. You didn't rely on somebody else really teaching you. And so that shows how your like passion, sometimes the things that we start to integrate within ourselves really become our purpose. So that's wonderful.
100%. 100%.
That's
You
wonderful.
are
So
spot on. Yep.
yeah, so how long have you actually been in business?
So I've actually been in business. I started doing credit restoration at the I'd say the middle of 2021. I launched my company in 2022. So I've been in business for 3 years. Yep, full
Awesome.
3 years. Yep, and we've
Awesome.
been growing. We've been doing great. It's been a good ride, I can say. I love helping people with their credit, and I love seeing other people win off of the information that I share to them. You know what I mean? That's really what it's all about. It's about the information. So if I can share some information and it helps change someone else's narrative, um, I'm all for it. I'm all for it.
Okay. Well, we want to share some information with some people today and give them a few nuggets that they can take away with them. So, first of all, I want to ask you about with the credit repair, and we're going to talk about individuals, right?
Hmm.
So, what is like the common issue that you find when dealing with people with credit repair, with individuals?
So the biggest issue that I see with individuals I take on as clients is, for one, they are uneducated on credit, so they really don't
Mhm.
understand um, how credit works. They don't understand how it's weighed, and they don't when I say weighed, they don't understand the credit factors, what makes up
Mhm.
a credit profile. All
Mhm.
people know is I pay my bills on time, and that is a huge factor when it comes to credit, but it's so much more. It's so much more involved in your profile makeup than just paying your bills on time. So the biggest thing that I see on my clients credit reports, the biggest thing are collections and charge-offs, and what
Mhm.
follows behind that are late payments. So late payments are the start. I'd say that's the start. When you miss one payment, and people get behind on these and they get in debt, they just stop paying because it's so overwhelming. They're like, listen, I'll never be able to pay this down, so I'm
Mhm.
just gonna stop paying it. And when you stop paying, it becomes charged off, and then it ends up in collections as well. So those are the three main things that I see that actually crush people, are late payments, collections, and charge offs. Those are the main three. It's some other things that that'll end up on your credit report, like student loans, child support, bankruptcy. Those kind of things will end up on your credit report, but those first three are the main three that people really have an issue with.
Okay. And before we came on live, one of the things you and I discussed was about how people take what they see as the easy way out and file bankruptcy. They're like, I can't pay all this. I'm just going to file bankruptcy and I'll start over. And
Correct.
people do it all the time, blah blah blah. One, I know that from personal experience, it's not easy to just file bankruptcy. Like, there are steps that you have to go through, and you can't go through it alone. You have to hire an attorney. You
Yep.
have to go through all this stuff with the courts. You got to take a class to see if you really qualify.
Yep.
All
It's
these
a whole.
things.
Yep.
Yes, it's a whole thing that you have to do. There are different types of bankruptcies depending on, what you are trying to do. So when you are educating your clients that may feel that bankruptcy is the first option, what is it that you tell them?
So when a client comes to me and they are thinking about filing bankruptcy, what I do for one is I pull their credit reports. I give them a full, I give them a full credit analysis, just a breakdown from head to toe of their whole profile makeup. And then we'll start to discuss as far as um, can you pay this debt within a 2-year time frame versus you having to file bankruptcy. Because some of this debt might be already, crazy default, like late. So it might have already been in collections. You might already have some charge-offs and things like that. So if that's the case, um, if you can't pay, if the debt that you owe, you won't be able to pay it off in at least 2 years, then I'll say, okay, you could possibly think about a bankruptcy. But what I also recommend is just credit repair, because 85% of credit reports, they have inaccuracies on them because it's all ran by data. No human being is sticking this stuff on your credit reports. It's all ran off of data. It's all computer based. So, within computers, they make a lot of mistakes. So, um, the bank will send the credit companies, when you have a late payment, just for instance, if you have a late payment and you ever checked your credit report and you see those little boxes at the bottom, and it'll come across, it says 30, 60, 90, 120, 150. Those are calculating the days that you're late on that account.
Mm-hmm.
Now, um, through the FCRA, everything has to be 100% accurate on your credit report. So if you are seeing a payment on Experian that shows you're 30 days late, and then you're seeing one that's on Experian and it shows 60 days late, that right there is not 100% accurate. That's
Mm-hmm.
grounds for deletion. So
Mm-hmm.
that's how you can remove negative items off of your credit report just by solely identifying the inaccuracies on it, and then you're just kind of picking them off. So sometimes, instead of just going straight in to try to repair your credit, sometimes you have to take a step back and collect the data from these
Mm-hmm.
institutions. So you collect the data, you get the data, you go through it, you analyze it, make sure everything is correct. If it's not correct, that's when you have grounds for disputes. So it's easier for you to dispute items that's on your credit report when you actually get the data. Sometimes we just try to go in and go for the jugular, and that's when you'll get these letters from these credit companies, and they'll try to stall you out. So they'll send you a letter and saying, "Hey, we congratulate you for trying to work on your credit, but here's one that my clients get all the time. We congratulate you for working on your credit, but it doesn't seem like this letter came directly from you." So they'll say, "Hey, if you have a company working on your credit, we can't." It's just a stall tactic that they use to try to slow
Mm-hmm.
up the process.
Mm-hmm.
Because one thing people don't know, the credit bureaus, they make a lot of money. They make a lot of money from the banks by
Mm-hmm.
you, the consumer, having a bad report. Because the
Oh.
more the banks actually have to pull your credit report, the more those credit companies get paid. They get paid $3 per pull. So
Oh.
imagine all of those institutions pulling millions of credit files every day. And the more times they have to pull it, the more they get paid. So it benefits the credit companies to keep you as the consumer with bad credit, because they get paid more off of you as the consumer. So to the credit bureaus, you are not the customer. You're just the consumer. The bank is the customer to the credit company. It's the bank. The bank is the customer. So
Okay.
that's how you got to look at these. These are just companies. They're all just companies. People get scared of them because they think they're like some type of government agency and things like that. These are companies. Like me and you have a company. These are companies. These companies are, you can look them up. They're traded on the New York Stock Exchange. Equifax, Experian, TransUnion. You can buy stock in these companies. They're
Right.
traded on the New York Stock Exchange. So they're
Right.
companies just like us. They're just data collecting companies. And that's what they do. They sell data, and they really get paid to sell bad data. So that's pretty
Okay.
much how that works. Yep. Yep.
Okay. Okay. Well, I just got educated on something because I did not realize or know about the the credit companies and the banks working together. It sounds like they're in cahoots in order to make money off of those who have bad credit, as you said, and that they are getting paid for every time your credit, they have to pull your credit. One of the things I do want to remind our listeners is that there are opportunities that they can receive a copy of their credit report annually, right? With
Mm-hmm.
each from each of those three services that you mentioned, as well as when you're denied credit. Isn't that correct?
Yes, yes, correct. So usually when you're denied from credit, the institution will usually follow up automatically, stating why you were denied.
Mm-hmm.
They'll send you just an itemized breakdown. Hey, too many recent inquiries, not enough open accounts, delinquencies on your credit report. They'll send out an itemized breakdown to let you know why you were denied, and then they'll also attach your credit score sometimes to that letter. So they'll let you know where you stand.
Mm-hmm.
And being that you mentioned that you could pull, that's a very good point, because I like to touch on this as well, because some people don't even know where they can find their credit reports.
Mm-hmm.
If they're not using one of these, paid for softwares, or things like that. Everybody thinks something you have to pay for nowadays. So you can actually get your credit report pulled once a week for free on freeannualcreditreport.com. So
Oh, okay.
freeannualcreditreport.com, you can have your credit report pulled once a week. And they'll show you everything that's on your credit report. And that's where you can start to pull your credit report and print it out. Print it out, see what's on it, see if everything is lining up on your credit report, and that's where you can start. Just pull your credit report and analyze it from head to toe. Make sure everything on there is reporting accurate. If you see accounts that you've never seen before, could be possible fraudulent accounts. A lot of people went through what's called the Equifax data breach. So it was
Mm-hmm.
millions and millions of information being sold online through the
Mm.
Equifax data breach. So that right there, it's one way that you can take advantage of cleaning up items on your credit report. Sometimes you have to get nasty with these companies, because they don't care. They don't care. They don't care that you have a bad credit report. So it's up to you, the consumer, to get it fixed. They don't care. It's always hard to get them on the phones. You write them a letter, they'll send a letter back, because the letters that they're sending are are usually generated by what's called eOscar. It's a
Mm-hmm.
computer generated system inside these credit companies that they use. It's called eOscar. So if you were to send it a letter and you're using a specific code in that letter, it'll automatically kick you a response, um, computer generated. So people think a human being is reading that letter when it comes into the credit bureaus. They're not reading that letter. It's coming straight through a machine, and it's called e-Oscar. So it's all ran off of computers.
Mm,
So that's some good information right there to take in, because people, you know, they think a human being is literally sick. You know how many letters these people get every day from consumers? Millions and millions of letters. So
right.
they don't have enough human eyes to read every single letter. It's impossible. It's
Right.
impossible. So if you even
Right.
think about it from, just that standpoint, they don't care. They don't care. So, a old trick from, kind of, it's not really old. People have been doing it for years. How you can really trick that e-Oscar system is you can use a handwritten letter. You can use a yellow piece of paper and you can write on it with a blue ink pen. That's how you can write the credit bureaus, and that's how you'll get a human eyes to read that letter. So
Oh,
that's just a nugget there for people that are out there looking to repair their own credit or work on their own credit. You can
right.
handwrite these letters, and that's kind of how you can trick that e-Oscar into getting a human being to read that letter, because it can't pick it up. It's on yellow
Right.
paper and it's on blue ink pen. And
Okay.
you can kind of like not make it directly on the lines. You kind of want to slant your paragraph a little bit. Like
Like you still in elementary school?
oh yeah, it's some I got some tricks up my sleeve, but this is just for, we don't necessarily have to take those practices anymore, because we have a lot of AI and a lot of tools out there now that are necessary for you to use to dispute items on your credit. So it's not as hard as it was, even 5 years ago. It's not as hard as it was to dispute, because they have a lot of software. Me and my team, we use a software. We dispute using the FCRA, and we use consumer law. It's three different ways that you can dispute with these credit companies. One is factual disputing. Second one is consumer law, and the third one is called Metro 2 compliance. So those are the three ways that you can actually try to repair your own credit using software. Software is Metro 2. Consumer law is just digging into the laws in the FCRA. It's the Fair Credit Reporting Act. And then you also have the FDCPA, which is it's the FCDPA. That's the Fair Credit Debt Practices Act. So they can use those as well to study consumer law. You can literally Google this. It's called Cornell Law.
Hmm.
You can Google it on Google, and go to 15 USC 1681, and you can use those. You can start there, use those laws and punch them in, and repair your credit.
Yes, yes. So for those who don't know what USC stands for, it's U.S. Code, and that is part of the federal regulations that part of our government. So it's all out there, public information, right?
Yep.
Public
Yep.
information. Nothing that you're sharing is secret. You can just, like you said, just Google it. Cornell Law
Yep.
has a lot of great information, and you'll be able to find things from the U.S. Code and the U.S. federal regulations.
Yes,
So
ma'am. You got it. You got it.
So, just for our listeners to know, please engage with us today, because we want to hear from you. It's not just about Dre and I having this conversation. It is about you and your learning and your experience. So, drop into the chat your questions or comments that you might have, so he can give his information and be able to provide you with some nuggets for you as well. So while we're waiting for some comments to come in, Dre, I wanted to know, on an average, when you work with an individual, how much does their credit score increase?
Oh man. So every credit profile is different.
Mhm.
So when I'm dealing with just the normal clients coming in, I never really give them um, any score increase. I mean, as far as like, I can't tell you a magic number. I just know putting in the, by me, it's a two-way street. A lot of people don't understand that when they enter credit repair. So a lot of times on my credit consultation calls, which are free, by the way, I give free consultations, and I also do a full free analysis for the client, regardless if they're going to sign up, or if they want me to do it, or if they want to even try to attempt to do them themselves. I tell people, as far as like the increase, I can't tell you a number. I just give you the regimen on how we're going to do this. Because like I said, it's a two-way street. I'm removing negative items. While I'm removing negative items, I need you to start rebuilding with positive items. Because the negative items, they actually hold weight. So I could remove 5 items from your credit report and you do nothing, and your credit score will actually decrease, because that debt holds weight. So if we're not adding on positive trade lines, that's what they're called. If we're not adding on positive accounts while we're going through the process of restoration, if you're not trying to rebuild it at the same time, then it kind of stays stagnant, so it's a two-way street. Now if you have some positive accounts and I'm removing negative accounts, then you will see positive positive scores, positive increase in your scores. You will see positive jumps because you have positive activity. Some people, they have nothing but just negative Nancy's on there. And I mean, if I'm removing all of those negative items, then I've had clients contact me, hey man, what's going on? My credit score just dropped, and I've removed 30 items from their credit report. So I'm like, well, I'm doing my part, and I give people, I give them an ebook when they sign up for them to read, so they can get the information. They can actually consume the information and want to take that next step forward in restoring. While I'm repairing, they can restore. So I coach people through it. The thing is, I can't do the work for you. So that's where that ends up. But as far as like my normal average client, they see over 150 point increases, just to answer that question. They do see a lot of increases. It ranges, like I said, because everybody's profile is different. Joe could have 20 items on his credit versus Sarah. She has 60 items on her credit. 10 of Joe's is positive and all of Sarah's is negative. So if I remove the 10 items from his credit report, his score will jump drastically versus me removing all 60 from hers and she has nothing positive. So it kind of fluctuates because everybody's profile makeup is just different. So I don't give any kind of like guarantees. I do guarantee you will see deletions within the first 30 to 35 days of joining my credit restoration program. So that's one guarantee that you will get, is you will see items deleted. Scores will fluctuate during credit repair. They will. They'll go up and they'll go down. So it's kind of, I just like to put that information out there because people, they'll sign up for credit repair thinking it's like the all-in-one fix. And if you're not doing your part, then it won't help your situation. You have to want to consume a little bit of the information, so you want to do better for yourself and not end back up in the same situation all over again.
Right. So that's part of your business, is not just to do the credit restoration, but also like giving the coaching and guidance for those that need it based on their situation, on how to not have to end up in that same way. Not, you want clients, but you don't want repeat clients, right? Because that means that they really haven't learned.
I'll take them now. Everybody don't, everybody doesn't learn. Some people are like, I've had clients, just this past, 6 months, even 3 months.
Oh wow.
I've cleaned their whole credit profile, and now they're back again because March 5th, May 5th, student loans kicked back in. So now everybody that went through this whole credit repair process, and now my credit was clean and everything was, sunshine and rainbows, everything was good. Now these student loans just came down, smacking down on them. And some people, it tanked their credit score. So now we got to go back in and remove those student loans. So,
Right.
yeah.
Okay. All right. Well, people can see on the screen how to get in touch with you. We make sure that they do that. But now I want to pivot and talk about how you help business owners still with repairing their credit,
Hmm.
in addition to helping them get business credit. So tell me, how did you decide to move into helping business owners repairing their credit?
So it all started with credit repair. So it all started with credit repair. Once I started really picking up, I was getting clients, from all over the United States. I advertise online. I'm on Instagram. I'm on TikTok. I'm on Facebook. So I advertise online, and I run ads sometimes, small campaigns and things like that. But what I was seeing was I was getting business owners that would come through my credit restoration program, and their end goal, after credit restoration, was to get business funding. So I'm like, huh. I had a lot of clients that were, I was passing off to another service. So I figured, why not add this service to my company so I can service those folks? Because for one, they already know, like, and trust me, because I've already repaired their profile. So if after me repairing their profile, the next step for them is business funding, then I can just introduce them to that side of my business. A lot of people wanted business funding after credit repair. So that's why I really added funding as a service, to my company. That's really why I did it, because a lot of business owners, they needed credit repair. After credit repair, everybody's looking for the money.
Okay. So what is the difference in how you help an individual versus how you help a business owner?
It's just all the profile makeup. So by me structuring someone else's, just the normal consumer's profile, is a lot different than, I wouldn't say a lot different. It's just going to be, we take different routes. I'll have the, consumer A, I'll have them, add trade lines, credit builders, things like that, to just restore their profile. Um, a lot of people, they'll want to, oh, I'm just looking to get an apartment. So, they have programs out there. One is called Rent Reporters.
Mhm.
I recommend a company like Rent Reporters to them, because what it does is, this company will allow you to pay them a monthly fee. They'll report your rent to your credit report every single month
Mhm.
as a positive payment. And you can backdate this up to 2 years. And you don't need a, I'd say, official landlord. It could be a person that you live with. It could be a person that, a relative in your family that you're actually staying with. You can use them as your landlord. So that's a huge cheat code right there for a person that's just a normal consumer. And after that, they're just looking to, move, get an apartment, or maybe get a car, to where the business owner is actually looking to get funded. So on his repair process, we're planting seeds, with different institutions. So we're going to different credit unions, and we're starting relationships with different banks already. So by the time that, um, you know, the business owner is done with credit repair, they're just about ready for funding, because they've now established some relationships. They've got, some secure products with those relationships. So, and versus consumer A, that is just looking to get a car or an apartment. So I would structure and rebuild out that profile completely different, just because I know the end goal.
Okay. All
Yeah.
right. And so tell us, because there are going to be some business owners listening to this who may need your service. Like,
Sure.
once you get that repair done, then what direction do you take them with the funding? How does that part work?
I'm sorry, can you repeat the question? It blanked out on us.
Okay, I'm sorry. Once you help a business owner repair their credit,
Hmm.
then how do you help them with the funding?
So Me and my team, we have banking relationship managers. We have them all over the United States. So no matter your footprint, no matter where you are, I can get you business funding through my relationships versus you going in or just sitting at home and applying online, which is what's going to happen is you're going to get either either denied because you didn't fill out the application the right way, or you'll get what's called just the algorithm limit. It's a low limit that won't allow you to leverage the bank's capital. So that's where we come in to where, if you walked into a bank or you applied online, you might get a limit of 5K, 10K on a business credit card, to where if you leverage the relationships I have, it could easily get you a 30K, 40K, or 50K approval. And it's huge because that will allow the business owner to scale at a rapid pace because you're using other people's money to grow and scale your business, rather than you using your personal credit and maxing out your personal cards, using your own income to fund your business. It's only going to take you so far. It'll take you it takes some people a long time to save 10, 20, $30,000 to actually
Mhm.
start a business, to where you can just go in and now you have 30,000 on a business credit card, or now you can leverage that capital on the business side, which it doesn't report to your personal credit. So that's the biggest kicker, is when you
Mhm.
get business funding, it doesn't report to your personal credit. So you're able to max out that business credit card and not being penalized on your personal credit profile for maxing out a business credit card, because it's attached to the business, not your personal. So that's how I service my clients, because we have the relationships already leveraged in the inside. We know what the underwriters are looking for in these applications. So we bring in the client and we get to work. Yep.
Okay. Okay. So, what are some of the challenges that you find when you're dealing with a business owner who might have a credit issue?
The biggest factor is utilization. It's always a utilization problem. So
Mhm.
when you're dealing with, when you're going for business funding, normally, all the normal, credit gurus, they'll tell you to keep your utilization under 30%. And ideally, what you want to do is keep your utilization under 10%.
So,
Um,
let me just ask you a question real quick before you go any further. For
mhm.
those of us, and I'm talking about like me, when you say utilization, what does that mean?
Credit utilization. So your overall credit utilization, as far as credit cards, because
Hmm.
credit cards are revolving debt. So revolving debt is usually what people get caught up in. Not too much installment debt. Installment debt, mortgages, loans, auto loans, things like that. It's one set payment every single month. When you're dealing with revolving credit, you can have a credit card that's 8,000, and if you max that card out, the interest rate on that card, you could pay the minimum on that, and now you're maxed out, so the utilization is very high. So if you have an
Right.
$8,000 card and you max it out at 8,000, then the overall utilization on that one card is 100%. It's maxed out.
Hmm.
So
Right.
the biggest factors on your credit report are paying on time and credit utilization. Paying on time is 35, it makes up 35% of your credit score.
Hmm.
Utilization is the second biggest issue. It's 30% of your credit score. So those two factors alone is 65% of your credit profile makeup. So those are
Okay.
two huge factors, and utilization is usually the biggest one that I see that hinder a business owner from getting funding, is because they've already maxed out their personal credit cards to try and start that business. And that's where a lot of people get caught and they get trapped and they can't get out of it. But we have very creative ways to help that business owner transfer that debt from from revolving to installment, because that's what you want to do. You want to shift that debt from from a revolving to installment debt. And then from installment debt, you want to then apply for business funding. Once you get business funding, then you remove that installment debt to the business side. So now your personal profile is completely clean, and now all your debt is now shifted to the business side, as it should have been in the first place.
Okay, so you are still giving us some language that we hear in other terms, but maybe not in these terms or understand what they mean. So
Mm-hmm.
tell us what the difference is in revolving debt and installment debt.
So installment debt is like your mortgage, your personal loan, your auto loan. That's installment debt because you're making an installment payment every single month, and
Mhm.
usually it's a set payment. You can pay more. You can pay more if you want to, but in the lender's eyes, they can see, oh, okay, his car payment is $358 per month. So they know that you're on the hook every month for $358, and it's
Right.
not revolving.
Mhm.
Um, Credit cards are revolving debt.
Mhm.
So you can, like I said, you can have a credit card, $5,000 limit on it, and you only use 1,000 and you only pay off 500. That 500 is now revolving into the next month. So that's revolving credit,
Okay.
versus installment. Revolving debt versus installment debt. You always want to try to have it on the installment side. It's never really, the banks like to see a mix of both,
Mhm.
because on your credit, I'll go back to your credit profile makeup. 10% is credit mix. So they like to see a mix of credit, not just credit cards, not just installment debt. They like to see a mix of both. So you having, 2, 3 credit cards, having a personal loan or mortgage, that's considered good credit mix. So that's 10% of your credit profile makeup, which accounts only for 55 points. So it's not a huge factor when it comes to your credit. It's not a huge factor, but it will hinder you in the lender's eyes when you're going for business funding. They like to see a perfect mixed profile.
Okay. All right. And so you said that you help your clients go from revolving debt to installment debt to business debt, debt or credit. Then that takes it from individual under the revolving and installment to the business side. Is that correct?
Correct. So I'll just give you a scenario. I have a client right now. She has about $18,000 in personal debt. Credit scores are still great. Um, she has about $18,000 in credit and revolving debt. She has about 18K, and her overall available credit is only 20K. So she's just about maxed out. So her utilization is like, it's really sky high. So
Mm-hmm.
the only way that you can overcome and transfer that revolving debt to installment debt is, we have a couple of different ways we can get creative with it, but I'll give you one here. And it's just simply applying for a personal loan. A personal loan is installment debt. So you can then take that personal loan that you receive, pay off all your credit card debt. Now you're taking that personal loan and you're paying off your credit card debt. Now, instead of paying 5 credit cards each month, you're paying back one personal loan at a set payment over at a set term. So instead of paying back 5 credit cards and then the debt still revolving, because you have crazy interest on these credit cards, anywhere from 18 to 35% on credit cards. So
Mm-hmm.
if you're maxed out 5K and you're paying 18% interest, you'll never be able to pay that thing off. So getting a personal loan for $18,000, getting that personal loan, and say, hey, I'm going to make this $18,000. I'm going to make my payment terms 48 months. Now you're paying back $18,000 over 48 months at a set term
Right.
versus, and then once you move that, you get the personal loan, pay off the credit card debt. Now you have one personal loan. Now that opens the door for business funding, because in the eyes of the lender, you don't have any revolving debt. Your utilization is super low. Your credit score goes back up to the roof. Now you can apply for business funding. Once you get business funding, we specialize in what's called capital stacking. We go for 0% interest business credit cards that range from 12 to 18 months. So once you say you get approved, 3 institutions, they all give you, 25K a piece. Now you got 75,000 on the business side. One of those credit cards you can then liquidate. You can liquidate that business credit card, and I'll get into some methods on liquidation in a minute. You can liquidate a business credit card. Now you can take that $18,000 that you originally had on the installment debt, take the business credit card, pay off that installment debt. Now it's shifted to the business side at 0% interest. So now you're paying back that personal loan, which shifted from credit card debt. Now you're paying all of it back at 0% interest over a period of time.
Okay. Okay.
Yep.
Okay. Now I do want to know, and for our listening audience, who is your target clients?
My target client are simply just, entrepreneurs, small business owners, real estate investors. Those are typically my ideal clients. Anybody that's, even like I said, you can have a startup. You could be looking to start a business, not even have a up and running company, because I'll touch on that in a minute. But those are my ideal. Those are my ideal clients. They have issues with credit. We get the credit cleaned up, and then we get them business funding. It's not difficult. People make it harder than what it is. I'll tell you, the hardest part is taking the first step. Once you take that first step, it's kind of like a breath of fresh air. Just like Martin Luther King said, take the first step. You don't have to see the whole staircase, because you're not going to see it right away. Credit repair is not an overnight fix. So taking that first step is the biggest thing that they can do. If you have these credit issues and you're using, you have a business, you're making money, but all the money you're making, you're putting it right back into the business. That could free up that income that you're actually bringing in, because you can now leverage other people's money to use that to put into your business, make money off of other people's money, and then pay back the bank. Keep all your money, put it in different investments and things like that, instead of having to use it and invest it right back into your business. It's kind of harder to grow and scale. Yep.
Right. So it's all types of questions coming into my mind right now. And I know that you said you want to go back to a couple of things that you've already mentioned. We got about 8 minutes left on this podcast, and I wish we could, stretch it. But
I told you I could go all day talking this stuff, man. It's what I do. I love to help people with this information, because the information that I've gotten, I had to pay thousands and thousands and thousands of dollars for. So I've joined huge mentorships. People are charging anywhere from $5,000 to $20,000, and I've paid it. I've paid it because I had to learn the information to make me who I am in this industry. I won't say I know everything. I'm still learning in my business as it grows, but I do know a whole lot that can help the normal average consumer or business owner. For sure.
Okay, well, we can tell because you are dropping a lot of great nuggets for people to pick up, and
I appreciate it.
Picking them up. So
yes,
you
ma'am.
touched on something that maybe in the next 2 or 3 minutes I'd like for you to expand on, and that is how you paid a lot to get the education you have. How does it work for clients that are coming to you, and the fees and things that you might charge? Because we know this is your business, right? So there has to be some money made.
So with credit restoration, as I do the credit analyst, I kind of I have set fees, but nothing's ever set in stone with credit repair because every profile is different. So I can't charge everyone the same price. It sounds unfair, but it with credit repair, it's more of the mail gets really, really expensive. So if I'm dealing with a lot of negative items, um, a lot of the charge comes from the mail. I don't make money off of it. You know, I have a staff. I pay my staff because I don't work too much in the business as I used to. Um, my days are crazy now, so I had to hire help to actually help me with my credit
Hey, that
restoration
means
services.
your business is growing. That's what it means.
Yeah, they're very great at what they do. I trained them up on a lot of this information, stuff that they didn't already know. I
Hmm.
trained them up on kind of like some of the systems and things that we can use and put in place. They work under me. They work every day. They work very hard. I have to pay them. I do pay them a salary. So,
Right.
and then I also have which I recently brought on in the last couple months is customer service. So the the person that signs on for credit repair will actually get assigned a customer service rep. So anything that they need to know with their credit, they can reach out to her. Her name is Angela. She'll take great care of you. She'll get you the information in a timely fashion, just so people know what's going on with their credit report. They also get a login as well to their portal. Um, so credit repair, I have two fees. I have two set fees, and it's just we charge $497 for regular credit repair, and then we charge $697 if we're dealing with a bankruptcy, which is a public record. So those are the two set fees. And like I said, nothing's set in stone. If I look at your profile and I see it's one or two items that only need to be cleaned up, then I prorate that price for them. Like I said, I don't look to take people's head off with credit repair. I want people to get the information. It's just a lot of times the consumer, they don't have the time. They don't have the
Right.
time to do this themselves. So I just think it's unfair to charge someone $2,000 or all these crazy prices that people charge for credit repair. It's
Hmm.
kind of insane because you can do it yourself as a consumer for a whole lot cheaper. But for one, you either have the time or you have the money, one of those two. And if you got the money to pay somebody to do it, then pay someone to do it. If you got the time, do it yourself. That's
Right.
what I always recommend. And as far as business funding services, we don't charge anything up front. It's no initial charge. We don't charge anything. We charge a 10% success fee on the back end of whatever the funding amount you request and you receive. We charge 10% on the back end. And the client is paying with business funding. They're not coming out of their own, pocket to pay this fee. They're paying with the business funding that they actually receive. So it's all tied into using other people's money.
Mm. Okay. All right. Well,
Yep.
that's some good information to know because when people are looking for services, they not only are looking at what is being provided, but they also, as a business, a small business, if someone just starting up, they're going to want to know like what is the investment, and then you've already stated the return on investment because it sounds
Yes,
like you're
ma'am.
giving a lot more
Oh,
than
big time.
what they
Big
are
time.
actually paying for, which is what we always want, right? We always want that. So we have about 2 minutes left. And for our listeners, can you just say how they can get in touch with you?
Oh yes. They can follow me. So you can follow my Instagram. It's at Stay Sharp U. You can follow me on Instagram. You can follow me on TikTok, Drae Peyton at Stay Sharp U. You also can follow me on YouTube at Stay Sharp University. And then if anyone needs help with their credit profile, if you want a free credit analyst, or if you're either interested in business funding, you can text 844-621-2614. Just text credit or text funding, and I'll know exactly what services you're interested in. And me or one of my team members will reach out to you and get you the information.
All right. And just share that number one more time for us.
It's 844-621-2614.
Awesome, awesome. So it has been a pleasure,
It
Drae,
has.
for having you here. You gave so much information, and I know we probably could go for a whole nother hour
Oh,
just
big time.
learning and you educating. So maybe, in the near future, we can have you back for a part two so we can give more information and have some more
Yeah.
business owners. But definitely, definitely, we want those of you who are having issues with credit and want to have that, Dre, to help you to restore your credit, or if you are looking for funding for your business, please reach out to him and be aware that he's here no matter where you are in the United States, that he will be able to help you to get to where you want in growing your business. So again, thank you so much, Dre, for being with me this evening, and we look forward to having you again.
Thank you, Sharon, for having me. It was a pleasure. It was a pleasure. I hope everybody got some good gems out of this, and I would love to come back on anytime.
Awesome, awesome. Well, thank you, everybody. And we look forward to seeing you again next month on the second Wednesday at 7:30 Eastern Time, where we'll have another great guest on the Royal Nugget podcast. So thank you, and everyone have a great evening. Bye bye.